The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We'll start out the day like we usually do, taking a look at the DAX. As you can see, we came in here this week with a relatively bullish bias because of the Gartley pattern that we had down here in the DAX, a little while ago. So it's going to be, yes, today is triskaidekaphobia. Very good spelling on that, Marshall. Good. The fear of the number 13. If you're ever in an elevator and you don't see 13 on the elevator board, that lights up, it's because they leave that 13th floor opening for storage. If you believe that, I still have 2 shares of the Brooklyn Bridge available for you. Anyway, I don't know. Fear of 13 is actually not a big deal, and I believe in China it's actually a positive thing, that 13 is a positive number, so who knows? We'll see. Oh, by the way, there's a lot of things in the news today about the new book coming out by the former FBI guy, and they talk about the fact about the mob and stuff. If you ever want to see a mob boss, folks, all you have to do is come to Scottsdale, Arizona, and go to the Talking Stick Resort and go into the poker room on a Wednesday or Thursday night. And if you look over at the 2040 Hold'em game, you'll see Sammy the Bull Gravano playing poker. He's there all the time, no bodyguard, nothing. He was in witness protection for about 6 months, and then he must have known something because he just got out of witness protection, and he lives in Scottsdale. Don't know anything about him. I've seen him once or twice, and anyway, that's neither here nor there. We'll go on to the next of this, and we'll see what's going. Yes, the DAX is that's a 3 drive to a top pattern, I believe. That is happening, I believe, Mr. Z, not a bottom. I believe it's 3 drive to a top in the DAX. That's what I think. Do they let him win? He wins on his own. I don't know if he's a good player or not. That's over my limits to play. I play in the much lower limit games and in the tournaments where you can have some fun. But those guys are, they're in a different pay grade than me. So I don't pay any attention. I stay away from celebrities, folks. Anyway, let's move on to the markets here. I believe, Mr. Z, we're talking about a 3 drive pattern in that DAX up there, but we'll review that. Now, another one we want to look at was the DAX, the FTSE. You'll notice we're making this is a daily chart, and we're making an ABCD pattern here, which is a Gartley sell pattern. We had the butterfly bottom down here, 2 weeks ago, and now we're having this little bit of a rally. Remember, we had our guest Norm Winsky on from Astro 10 this week on Wednesday, and he alerted us to this huge cluster of things that are occurring here over the weekend. So we need to pay, very, very close attention to it between the 15th and the 18th of April. So that's going to be a big cluster of things. Maybe they don't move very much from that level, but we're having some completions in some of these patterns that look very, very interesting. Now, one thing I did want to mention, we started the week talking about the potentially very, very bullish pattern that we had in the Dow Jones on Friday. I'll bring this up just to show you. This was a beautiful 135 pattern. You can see the little 135s marked in red. That means that the number 3 retracement was 61% of number 1, and number 5 was 61% of number 1 and 78% of number 3. It was just absolutely as perfect as you could get. That alerted us to a possible very, very bullish scenario in stocks for this week. Even though they closed right on their old kabuki on Friday, they reversed right away, and that's that's usually a very, very positive thing to do. And we also were seeing that, of course, in the Russell, and the Russell index was doing the same thing. In fact, the others were doing the same thing. that the Dow Jones was doing. The S&P was actually acting a little better than the Dow Jones, so that was another reason. But with this Russell, we noted that if you broke that downtrending line there at 148 in the Russell, it would be very, very negative. But the market has acted extremely well. We're a little bit higher again today, which is suggesting that we're still moving to the upside. This is going to be interesting coming in because we're going to have some overhanging patterns here. Let's just look at update the Dow here so you can see it of where we were, and we'll be taking a look. You'll see there was the 135 pattern on Friday, and this is the last day of the week. We've been up every day, and we're even higher this morning. We're above the 25,000 level in the Dow Jones Industrials, and that tells us that we could get a little bit higher. In fact, the ABCD pattern on this is 25,000. And I believe we're getting pretty close. We won't be too far away from that if we get a really strong move there today. But remember, the longer-term pattern, the bigger ABCD pattern in this, going back to January, still takes us down to that $22,500 level. Now, that's a probability, folks. We know that some of these patterns don't work, so you've got to pay attention, because with all the news that's out there and all the things that are happening with war and trade agreements and tariffs and all the other stuff that's out there, anything can happen. You can see these markets have tremendous moves of 60 to 80 points in the S&P and 500 to 700 points in the Dow, without too much trouble. So remember, you must use a stop, because if you don't use a stop on a trade, you basically are telling the market that I know more than you do, and I have no fear of you. And if you want to be successful in this business, you better respect the fear, because that's what will protect you. It's not about how much money you make, it's about how much money you don't lose, and that's the main thing. The same thing, David, I agree with you 100%. I am totally worn out about the news. I don't like to listen to it. I prefer country and Western music, and also Mozart and some of the others. But son of a gun, it gets a little bit overbearing here. But this is what's a absolute boon to the media companies, because many people are stuck to the TV watching this stuff, and it's just like a giant soap opera. So we'll have to wait and see. Now, I've had a couple of requests here to take a look at some things, and one of the things I wanted to show you was the coffee market. This was brought to our attention by Mr. Z in the Den a few weeks ago, and you'll notice here all the patterns that were forming down here at the 115 level in the coffee. We're now trading in the 120 range. So this is probably a pretty major bottom that has occurred in coffee. But the thing that is there, besides the double bottom that occurred there at the 115 level, is that you had multiple ABCD patterns coming together. And in fact, there were 3 of them there. And so that was telling you that double bottom was most probably, very, very important. So I don't trade coffee, but I will keep an eye on it, because some people do, and it is certainly tradable. The only reason I don't trade coffee or cocoa or orange juice or those is because of the experience that I had way back in 1974, and I don't need it with all the other stuff that's going on, so I just move on to other things. When we get back, we're going to talk just a little bit about the cattle and hog market, and then we'll move on to the bond market.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're back, and I'd like to talk a little bit about the August cattle contract. As you can see here, we had this big expansion to the downside at the 1.27 level, and then we had a huge reversal. We want to thank our friends here at the TFNN, Dan, Mr. Z, and a few of his buddies in there that were really pointing this out when it hit 97 cents a pound, and we had this tremendous rally. But what you're seeing now is you're seeing just a little bit of a pullback here in cattle at the 382 level, and it looks like it's getting ready to work higher, much like we've also seen in the hog market that we'll cover in just a second. But one of the things that you've got to remember is that the news will follow the trend. I mean, we've been talking about, or they've been talking about on the air about these tariffs and all this stuff that's going on, and there's a lot of panic going into it. But the market is acting like, these tariffs are not going to be, much of a big deal. So whether that's going to be the case or not, we will have to wait and see. But I've got a new phrase, folks. I got a new phrase for us here at TFNN. If I don't understand what's going on, I'm going to refer to my team members before I can get back to you. So I will, if you want to be a team member, let me know, and we'll form a little group so when we don't have an answer to anything, we can refer to it as our team member will bring back to us, which you probably will never hear from it, but who knows. Anyway, let's take a look here at this hog market because here it is, folks. Look at this hog market, folks. This was a beauty. This was another one that Mr. Z brought to our attention, along with, if you remember, we had Rich Anderson on too, telling us that 72 level in July hog was really important. And you notice that we had a 3 drive to a bottom pattern at the 1.27 in the hogs. That was the same time that the cattle were hitting. So this is really saying that maybe these tariffs are not going to be nearly as bad as the market is telling us. But, we'll have to wait and see. The news on some of these things, folks, is so ridiculous that you just don't know what to think about. I mean, I'll move on to another subject because I'm afraid if I say something I'll get myself in trouble, and then I'll have to have one of my team members get back to you. And believe me, we have a lot of employees here at Trading Tutors, so we want to get right back to you on that one. Let's take a quick look on one that really is frustrating. This is the kind that really drive you nuts. And here's the one that we were talking about in the newsletter this week. This was this Australian dollar. We were really bullish this, folks. And the two patterns that you see there in the insert were very, very similar over time in price, coming in at the 78% level. The level we were looking at was 76.30. It got to 76.44. And now it's trading at 78. And guess what? No Cupid doll at the circus this time because we missed it. Our order wasn't filled. I didn't buy on any strength, so it took off against us. Well, we weren't short, but we missed it. We happened to be very fortunate in the Canadian dollar this week. That was a really big win. And also the euro's done relatively well. But the main thing is that you're going to miss some of these, folks, and you know there's nothing you can do about it. If you don't think you're going to miss some of these, you got to be really realistic with yourself and look in the mirror and realize that you tell yourself that you're the only person that's ever going to miss a trade. Hello, that's like there's only one person that gets the high tick and one person that gets the low tick. You know, so don't be concerned about that. The main thing you want to concern about is how much money you're going to have to risk to see if you're right or not. You know, that's the real key to, you know, really doing this. And you're gonna lose you're gonna lose a lot. Sometimes you're gonna lose 5-6 times in a row, but there's also going to be times when you know you're basically infallible, and you know that might last 2 or 3 weeks before you run into a bad stretch. But it's all about probabilities. It's not about certainty. There's no certainty in these markets, so pay close attention to that. That'll save you a lot of pain, you know, over a long period of time. Now, I know there's a lot of chatter about the bond market, folks. That bond market is just flat out. I'll take a look here at the end here just a second, but that bond market is flat out really bearish. Let's just look at the bonds first, Danny, and then we will jump in here to take a look at the. Here's the bonds. You can see this is a weekly bond chart, and you can see this dead cat bounce that we had in the bonds. We got up to 147. We're now trading at the 145 level, but these bonds and notes look much, much lower, i.e. higher interest rates. If we take a look here at the Japanese yen, this was another one that we were fortunate enough to be in, and that was the we had a really nice support level down at that 104.20. We got to 104.56 here again. It missed it by about missed the big 1.27 by 10 pips, but it made the smaller 1.27. And then we had the nice pullback, 50% pullback, and now we're almost we hit the 108 level. We're at 108 now in the Japanese yen. And that completes that ABCD from that low. But that's a really important number down there. So my assumption is that this dollar is getting stronger, not weaker. And that also should mean that the interest rates, you know, would start to be going higher. Because if interest rates are going higher, people will be wanting to buy our Treasury bonds and Treasury notes. In order to do that, they have to convert to U.S. dollars, and that makes the dollar a little bit stronger. So those are the keys that we're sort of keeping an eye on this morning as we look at some of these markets that we're looking at. Now, as far as the S&P, if you remember yesterday, we were talking about the resistance level that occurred up at that 75 level. We hit that. We backed off 25 points. We got down, 25 points. We got down last night to 2651. That was a perfect 61% retracement of the low that we had yesterday morning at the 2635, which was a perfect 61% retracement of the low from 2625. And it was also a 382 retracement of the low from 2610. So now what we're doing is we're making multiple patterns up here around the 2680 to 2690 level. So this is going to be something to look at coming in over the weekend, because we have this cluster of things that Norm Winsky has told us about. And of course, if these don't work, we have to contact Norm. You know, his private number is 555-355-5555. So let him know that you're unhappy if it doesn't work. One of our team members will get back to you on that one. Okay, now someone's asked me a question about Bitcoin, and I know less about Bitcoin than just about anything else other than that it's a cryptocurrency, blockchain type of thing, and all I know it's one wild puppy. But we'll take a look at the chart here after we come back from the break, because we really don't have enough time, and it's going to take me a couple minutes to go through it. So we'll take a quick look at it. The question that about the gold, I really believe that, the gold is not ready yet, folks. It was screaming at us up there at that 1369 level, big ABCD. We exited just as quick as we saw that, and then we're going to be able to set and see what was going on. Who did you call, and why was the mailbox full? I don't understand that one. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a quick look here at the Bitcoin. We've been following this for quite some time, especially when it was getting all the news when it was $20,000 a share. And as you can see from this chart, at $20,000, we were making a huge ABCD pattern going way back to $500 a share. It was also a perfectly symmetrical 3 drive to a top pattern. and it was spot on. But the key to look at, I believe, on this chart of Bitcoin is when that Gartley formed. As you can see here, back in January, that's when the Merck was coming out with the CME versions of the Bitcoin commodity future. It was trading right at 19,800, I believe. In fact, some of the futures, the spot ones, were 20,000. That was a perfect ABCD pattern, as you can see there. That was right about early January. You know, that was what, it was 4 months ago. And you won't believe this, but they only have an 1,800 contract open interest in the Bitcoin. So there's not very much interest in it at the Merck, that's for sure. So I imagine it'll increase a great deal later on. But right now, it's not really doing very much. The key to watch here is what happened over the last 36 hours in the Bitcoin contract, because we rallied from 6,400 all the way up to 8,200. We did most of that yesterday with a 15% jump. The overnight high last night, I believe, was right near 8,200. So the key to watch if you trade this, and I certainly don't trade it, but gosh, you can look at this. Technically, it's really got a lot of ABCD patterns. It follows the ratios nicely, and all that's really telling you is that you're looking at a market that is, you know, spot on, technically correct. And so watch what happens over the next few days in Bitcoin. We will be following it, but not much, because I know a lot of you folks don't trade it, and it's certainly not necessary, you know, to trade it, because there's so many other things that are going on that will be you know, pretty valuable. Now, I wanted to bring up the chart of that E-mini S&P because it acted so nicely yesterday, and you can see the ABCD patterns that we're looking at here coming in around the 2688 level. That's about 10 points or so from, I don't even know where we're trading right now. We're trading at 2680, so we're about 8 points away from that big ABCD pattern forming, and you know, keep an eye, you know, on that one for sure. Another question about the gold, folks. There's nothing to do in gold right now. There really isn't. You know, we had a tremendous break. We went down from 65. Went from 65 down to 35. We had a $30 break. The harmonic number in gold is 34. So far, we've only been able to rally about $7 or $8. And what we want to watch is what that next rally is going to be in the gold. But believe me, I don't believe gold's going to go anyway without taking its big sister, little sister, silver with her. And silver certainly looks very negative on the chart. So and I've been bullish gold for a long time, and I thought it had a chance this week, but when it completed that ABCD and failed, that was a huge pattern recognition failure on our part, and that's why we exited the gold contracts at that 1355 level. And we'll look at it again when we complete another pattern, and we're not anywhere near that, because all we've had is a big break and a, you know, sort of a little bounce. But whether that means much or not, you know, we'll have to remain to see what's happening. Now, the bond market is totally different, because we've dropped almost 2 handles now from the sale we got up there at that 147 level, and that looks like it certainly wants to go lower. So that's another one that, you know, that looks really, really interesting. Okay, one more question about the Australian dollar. The fact that I missed the bottom, what do you do next? Well, the first thing I would do, I'd go back to Gartley's book on page 221 and 222. And Gartley spent 2 full pages out of a 600-page book describing this pattern that I named it the Gartley 222 back in 1975 because it was on page 222. He spent more time talking about this pattern than any pattern in the book. And there were, oh boy, probably 50 patterns in the book, but that's the one he spent the most time on. And the bottom line was, when you have a new bull market, you want to buy the first ABCD correction to the downside. So if this is a new bull market, what we want to do is to wait for an ABCD correction in the Australian dollar to the downside, probably around the 77.20 area. That's where I would look, but you have to have it all coming together. You have to have the ABCD coming. You got to have the ratios coming. And remember, the ratios have precedence over the patterns, because ratios are mathematics. The pattern is geometry. And as Einstein said, God is a mathematician. So we definitely want to watch this unfold if we get to that level. So there's nothing to do there. One other question that's coming to the forefront this morning is about the grain markets. Boys and girls, these grain markets, they don't care about tariffs. Just look at the price of these. I mean, these have just been, we're having a nice correction in wheat that should be a buy coming in here to the new moon that we have coming in here. I believe on the 16th is the new moon. Let me check the old calendar. It's the 15th. That's Sunday. So on Monday, you want to take a look at, whether we ever hit a pretty good low in the wheat market, but that's a pretty nice one. And, of course, it topped on the full moon, so I would really pay close attention to that new moon. That's part of that cycle scenario that Norm Winsky's talking about. And on the 17th is a huge, we've got Mercury is opposition to Jupiter. Venus is trying to Neptune. I mean, there's just so many things. And Saturn is moving retrograde. And, that's the day your checkbook goes retrograde as you pay your taxes. Anyway, it's going to be a real interesting week coming in here for sure, especially with that new moon coming in on Sunday. There should be a lot of volatility and stuff. And remember in January of 1991, and you remember Schwarzkopf. He basically, General Schwarzkopf, Norman Schwarzkopf, he sent the Navy SEALs in on the new moon to attack Iraq, so Baghdad. So keep an eye on that. Maybe the Navy SEALs will be operating again on a new moon, but we'll have to wait and see. That comes right out of the Art of War by Sun Tzu, which he says, send your troops in with the darkness of the moon. So that goes back several thousand years, but we'll see. But that was one of his favorite books, by the way, along with Robert Montgomery Knight, also known as Bobby Knight. That was the book that he lived by. Okay, I actually happen to know Bobby Knight because his assistant coach, Ron Felling, was in my wedding party. He was one of my best men. Anyway, let's move on here to a couple of things that I wanted to mention about these grain markets, and that is the fact that these markets are not acting negatively with the tariffs that are involved. And they talk about the soybeans and the hogs, which are all related. And these markets are not acting bearish, folks. That's basically telling you that somebody on the inside has got some information that this stuff is not nearly as bad as you might think. That's the main thing. So keep an eye on that. Thanks for posting that, David, about the Art of War. That is a fabulous book. 877-927-6648.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and I just wanted to post a chart here of this November bean chart. This is right out of the letter that we do each day for our subscribers, and you'll notice that we had that really strong support at the 78% level. You'll see how this market reacts to these ratios. It's just, unbelievable. We've been up to the 1060 level again. We're right near there again. I mean, we're almost ready to break out again to the upside, in these November beans. So, there's not much that looks very negative. And remember, it's hard to go through a growing season without at least several scares. So watch for sell-offs in these markets, because when you get them, you got a pretty good chance, for some real serious things to have happen. And that's really what you're trying to do, is to spot things that look really, really interesting as far as low risk opportunities. And I think this grain markets, corn, wheat, beans, are all looking very, very interesting from a technical standpoint. And remember, we're just beginning to plant corn, beans not for another few weeks. So this is just the beginning of this. The $64 question is whether it's going to occur with any regularity, and it usually does that. Now, oh dear, hold on, I'm trying to do something here that is going to be about 2 levels past my pay grade, but I want to get this up here to let you take a look at it. We've got to go through a sequence here to show you why patterns fail and what to do after that. Let's take a quick look here at the chart of the crude oil. This is an hourly chart, and I wanted to point this out, folks, because this is one that was a total failure. At the 64.60 level, we had a lot of things going for it at that level. We had a 61% retracement of the high from the 25th, spot on. 78% level from the high on the 12th, spot on. We had a 1.27 expansion from the 5th, spot on. And as you can see, we went through there like it didn't even exist. It was a quick loss of 60 pips, and then you move on to the other thing. Now, someone asked me, what do you reverse? I'm not a very good reversal. Well, that's the understatement of the year. But I don't reverse at all. So I'm just, I just move on to the next pattern. It works for me, and that's basically what I'm trying to do. But let's look now very closely at this this market here for the crude oil. If we blow this up, I want to show you what it seems to be doing. Let me just get this up here so we can take a look at it. This is the daily chart for the crude. And as you can see, we have this potential 3 drive to a top pattern forming at the exact 1.27 expansion. That's at 68.85. That's a buck and a half from where we are right now. That's also an ABCD. But look at the retracement, folks. Look at the retracement between the 20th and the 12th. It was exactly 61% retracement. And what did we do? We did the exact same retracement back on the 3rd of April. We were bullish there, and you had a really good rally. Unfortunately, what it did was it took out that double top, and it tells us that we're going to go to 68.85. So this trend is still up, and it's got a really good chance to get to that 68.85 because we've cleared the magical 66.50 level, and we'll see if that's going to be the case. Now, the only way that this can turn bearish is that if we were to drop $1.50 a barrel to get below $66 a barrel, then you would have a potential that this was nothing more than a false breakout. But you can't pay the bills on false breakouts, folks. That doesn't work. Believe me, it's just not something that you want to to try to do. It just really doesn't work very well. So remember that as you go through and look at some of these particular charts. Someone's asking the question about the gold. What happens if this was the big bottom in gold? And there's a possibility, of course, but I'm basically looking at the whole complex. I'm looking at the XAU. I'm looking at the gold itself. I'm looking at platinum. I'm looking at silver. And silver flat out does not look very bullish. I mean, we stopped exactly at the 50% retracement, and that's all it could make was a 50% retracement when gold made a new high in the year. That's not bullish. That's not bullish action, boys and girls. That's just that's just something that exists. I don't know why, but I'll have to rely on one of my team members to get back to you on that one. Okay, one other question someone's asking about the lunar effects of on the grain markets. Folks, that goes back so far back, and you look at Andrew Lowe's book, The Evolution of Technical Analysis. He talks about the Sumerians and Babylonians looking at this phenomenon of the moon and Mercury also going back 5,000 and 6,000 years. That's when they thought the Earth was flat. Hello, everyone. Let's get together on this one because, things have changed through the years. Remember, the Dark Ages is what caused a lot of this information to be lost, and it took several hundred years to get it, back in vogue. So anyway, watch the wheat. The wheat's got a really good chance here to make a bottom here on Monday, and that's what we're going to keep an eye on. Whether it does it or not, we'll have to wait and see, and we'll see what's going. Okay, people don't like to stay short over the weekend in gold. That's, Danny, I'll tell you something historical that I remember back in the old gold trading days. You don't want to be short gold when the Pope out of the Vatican is out of the country. I believe someone's done some work on that. I can't remember who it was. It might have been Chris Carrollin. I'm not sure. But whenever the Pope is out of the country, gold has a really strong upward bias. So I have to wait and see what's going on. Now, we just had a $12 rally, $11.50 rally in gold. If that's the case, that ought to be all we get. 1346, 1347 is all we should get as a rally in gold because when it's bearish, it only rallies around $11. So I don't know if that's going to be the case or not, but one thing I would do is I would go and look at that gold, on a smaller time frame to see if there's an ABCD structure in there, and the reason isn't because we went down to 35 and change, and then we've rallied up to around $11. But we shouldn't rally more than around $11 or $12 if it's really bearish. So keep an eye on it. It's going to be really interesting to see if that's going to be the case. Watch the opening price here in the S&P, folks, because we opened strong. We're weakening a little bit. We're right up against these price objectives. One of them was at 26.80, and we got to 26.80 and a half. The number was 26.81. So that's that one ABCD pattern. And of course, there's another one there at 26.88. So that should be a pretty significant high in this, if it is in fact the case. And with these cycles coming due over the weekend, it's going to be really interesting on Monday, especially with rockets getting ready to be launched with Rockets Red Glare. That comes in some kind of a song, isn't it? It's a country and western song. Anyway, we'll refer that to one of our team members to see if we do that one correctly. Now, if you have any questions, it's 877-927-6648. The opening, Danny, is the first 45 minutes of trading in that S&P because that's amateur hour, and you watch where it's doing. See, we've got another 15, 20 minutes, and if we're below that opening, that has a negative bias. You'll notice yesterday it was a positive bias. So we'll see if that is going to be the case. We'll have to be able to see what's happening. The actual open price was 79, correct. That's very good, Mr. P. Appreciate it. 877-927-6648.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, in the words of a great philosopher, chance favors the prepared mind. Let's take a look here at this wheat chart that I've posted in here. This is for Christmas wheat. That's December. And all I want to do is to show you that, you know, on this last rally, we made a perfect 78% retracement from the high that we made at 561 a bushel. And what I'm looking for now, those little black lines that you see, those represent pretty much what the harmonic number is in wheat. And you notice it'll come down into the gap area, which is at the 50% retracement, which is equal to the old high that we had way back here in February. So there should be pretty strong support around 16 cents lower in the wheat. That would be around the 529 level if we get to that level. So we want to keep an eye on it because it's got a really good chance of making it if we do get to that level. So let's move on here, and someone's asking the question. We're trading at 533 right now, so we're not very far away. We're only about 6 cents away from that, but we want to be watching that on Monday, which is when we have the new moon. So we'll see what's going on here. Let's just show you the updated chart here of the wheat. This is where it's at right now. And of course, we're looking at it on a daily basis, haven't quite posted yet, to come down around to 5.30. So we're only 3 cents away, but you got to wait till Monday, because that's the new moon. And these lunar cycles in wheat and corn are, these are really, really quite good. So pay attention to those. That's something that'll be a really good indication. We do have this monster cluster of stuff coming in over the weekend, starting on the 15th, the new moon, going into the 16th, 17th, and 18th. There's a 3-day cluster about 6 different things, I think, that Norm Winsky talked about. And of course, if he's wrong, we want to contact him directly. And he's been pretty good, so we have to give him a little bit of credit in here to watch that. So one second, please. Anyway, that's it. Live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!